Kraft Foods. Make today delicious. Kraft as a whole is a relatively new company, but its brands have been around for centuries. Candied fruit and baker's chocolate were both introduced before 1800. The forerunner to Post cereal, Postum, was introduced in 1895, with the familiar brand Nabisco following in 1898. General Foods introduced Oreos in 1912, Planters Nuts in 1916, and Kool-Aid in 1927. Through this time, there was no official Kraft company. Kraft was the J.L. Kraft wholesale cheese company. It was not looking to absorb brands. The most notable Kraft brand, mac and cheese, was introduced in 1937, followed by Tang in 1957. The company today was started 30 years ago with General Foods' acquisition of Oscar Mayer in 1981. 4 years later, Philip Morris purchased General Foods, and 3 years later it acquired Kraft. Within 1 year of the Kraft merger, Kraft General Foods was created. In 2000, Philip Morris acquired Nabisco and merged it with Kraft General Foods. Just 1 year later, Philip Morris started to sell shares of Kraft stock on the New York Stock Exchange, and 6 years later, Kraft sold its first shares as a fully independent company. It is now one of the components of the Dow 30. In 2008, Kraft sold off its shares in Post cereal and made room for one of the biggest purchases in industry history. In 2010, Kraft purchased Cadbury for $18.5 billion, further expanding its group of brands. Kraft's total revenue in 2010 was $49.2 billion and is made up primarily of 6 components listed here, with confectionaries and biscuits making up the majority of its business. More than 50% of Kraft's business is outside North America, with 28% of sales coming from developing markets. The company expanded through the global recession, increasing its workforce by 30% to 127,000. Kraft's main competition comes from Heinz Company, Nestle, Unilever, and Frito-Lay. Although Kraft does not perform the best in assets and competencies when compared to Unilever and Nestle, this is because the two companies are much more diversified. Heinz is closer to Kraft in its business, and you'll see that they are both about as strong in terms of geographic coverage and brand diversification. Kraft reports its operating results through 2 commercial units, Kraft North America and Kraft International. Kraft North America operates in the U.S. and Canada and manages its operations by product category. Kraft International manages its operations by geographic location. Kraft International commercial segments are the European Union and developing markets. The developing market segments include Oceania and North Asia. Consumers across the U.S. are showing increased preference for fat-free and healthy food products. Food items containing trans fat are losing market share to low-calorie, low-fat products. Kraft is tapping into people's growing health and wellness concerns by improving the nutritional profile of its snack portfolio. Kraft has reduced or eliminated trans fat in most of its products, introduced whole grain versions of snacks including 100% whole grain Fig Newton cookies and 100% whole grain wheat thin crackers. Kraft Foods has also launched low-fat Oreo and Nabisco 100-calorie packs. Kraft also offers fiber options with fiber-fit granola bars and fiber-fit cookies. As part of its health and wellness strategies, Kraft is focusing on 4 key opportunity areas that meet consumer needs: weight management, nutrient delivery, performance nutrition, and natural and organic. The company reduced the sodium in many of its products, as well as launched the South Beach Living line in the U.S. for weight management and health concerns. With strong investment in research and design and a new line of healthy products, Kraft is in a strong position to capitalize on the rising demand for healthy food. There are many strategic uncertainties that Kraft Food must face, such as, will another major firm enter their section? Will distribution technology be replaced or changed and affect how they distribute? Will a new food or product be accepted by the population? How sensitive will the market be in regards to price? And will generic brands continue to gain popularity and market share? The main strengths of Kraft Foods are that they are a leader in the global packaged food industry, they offer a diverse array of products, they have strong brand strength and recognition, and they offer a global distribution network. The weaknesses include the lack of brand expansion that Kraft Foods have explored, as well as an increased leverage post-Cadbury acquisition. The opportunities that Kraft Foods Corporation can look into are to embrace the synergistic benefits with the Cadbury label and the new growing demand for health and wellness products. The volatile economy and the growing use and demand of generic store brands are few of the threats that Kraft faces. As one can see, the profitability metrics for Kraft are continually growing. The net revenues in 2010 were $49.2 billion, which was an increase from the previous 2 years. The diluted earnings per share had gone up as well to $2.39 in 2010. The free cash flow in 2010 had fallen. However, this was just after the large purchase of Cadbury. And lastly, the dividends per share is very consistent for Kraft, holding at $1.16 for 2009 and 2010. Looking at the model of profitability for the snack food industry, one can see the high competition among firms. There are many firms fighting for a limited market share. The main threat is substitute products that are less expensive store brands. This is especially prevalent with the poor economic conditions. The bargaining power of customers is high, however the bargaining powers of suppliers such as Walmart is even higher. Lastly, the threat of potential entrants is high as new products are always being introduced. Kraft Foods is a member of the Snack Food Association. This market is making considerable growth, increasing their sales by $5.95 billion from 1991 to 1999. The main distribution systems for snack foods are Walmart, drugstores, grocery stores, and convenience stores. Despite Walmart's overall success, they lost dollar and percentage sales in the snack foods market. Between 2009 and 2010, grocery stores gained ground on the snack food market, increasing their share point in the major snack food categories. Grocery stores gained 66% of snack food share in all categories. There are 5 key trends influencing the snack food market: health and wellness evolution, the search for satiation, snacks that go beyond being sweet and savory, the organic and green lifestyle, and the brand loyalty while keeping value in sight. 71% of consumers are trying to eat healthier, harming the snack food market. This is pursuing the emergence of new snack food categories such as nuts, granola bars, and dried fruit. Healthier snacks are growing at a faster rate than indulgent snacks. The new organic foods market is emerging. In 2010, there was an 8% growth in organic snacks and a 7% growth in natural snacks. The organic snacks are putting pressure on snack food markets to move in this direction. Consumers are looking for snacks to satisfy hunger the most. They are not looking for meals to fulfill an immediate need. Overall, consumers are still brand loyal. They're buying their favorite brands more often than in previous years. However, price does still factor into the consumer's purchase decision, with 47% of consumers switching to store brands when the budget is tight. The rising technological advances of the 21st century have provided Kraft with a new means of communicating with its customers. Kraft's iFood Assistant is the app that provides customers with how-to videos, smart 1-2-3 recipes, and recipe box or built-in shopping lists that enables Kraft customers to easily utilize the various Kraft food products. Another iPad app in which Kraft has developed is Big Fork Little Fork. This helps parents in finding kid-friendly recipes and video how-tos that the whole family can do together that further projects Kraft's family-oriented ideals and products. Social media has been a dominant force for advertisements and consumer outreach for Kraft. The Kraft marketing team is using social media as a research tool to gain insights into how consumers feel about products. This provides a vastly larger data set than ordinary survey panels and focus groups couldn't accomplish. This unique social media monitoring has the ultimate goal of enabling analysts to track long-term consumer trends such as evolving consumer tastes. The current economic trends have been impacted by the global recession in both developed and developing countries in which Kraft operates. Retail and food services sales have recovered from a near 10% sales drop in 2008 and 2009 to an average of 8% sales change from the previous year. The compounded annual rate of change in real consumption for consumer products follows a similar pattern. The first half of 2009 saw negative consumption rates, which were followed by positive consumption rates into the first half of 2011. These economic trends coincide with the current consumer trends. Low and middle income countries see a higher responsiveness in food consumption to an increase in income compared to high income countries that see a low responsiveness. This response to a shift in income is reflected most in the purchasing of high value foods and is seen least in staple foods. Developing countries are beginning to see the introduction of supermarket change, which makes these products more readily available to consumers. Developed countries are seeing different trends. Packaged food consumption has increased in high-income countries where the demand for convenience is growing and lifestyle changes are occurring. These lifestyle changes have been brought on by urbanization, home-away employment of women, and increased levels of information available to consumers. Furthermore, there has been an increase in sales in private retail brands from a demand for organic foods in high-income countries, in particular Western Europe. Kraft's future development is largely based on the company splitting into 2 entities, Global Snacks and North American Grocery. Global Snacks will consist of the current Kraft Food Europe and developing market units, as well as the North American snacks and confectionery businesses. North American grocery would consist of U.S. beverages, cheese, convenient meals, and grocery segments, and the non-snack categories of Canada. Investments of this business will be expected to be seen in product innovation and world-class marketing than the traditional grocery channels. The reason behind the split is for each business to be able to focus on its own distinct strategic priorities, financial targets, and unique opportunities. This will enable investors to value the two companies based on their particular operational and financial characteristics and invest accordingly.